John, I want to get to you in a second because there's one of the top stories in the Journal about the Fed and terrorism as well that you co-authored I want to talk about. But, Stephen, give us your take. Ahead of the retail sales number tomorrow, the PPI inflation data out tomorrow, right, Keith? What are you expecting from markets?
Well, I think the markets are pretty volatile right in here, Maria, but we're actually very bullish going into next year. Broadly, stocks are cheap. I think the economy's doing fine. There is this fallout in the energy space, but we're going to start getting some positive impacts of low energy prices, too, and I think we shouldn't forget about that.
And you want to be allocated to what? Technology, the growth stories?
Well, we like equities, and within equities, we like industrials, financials, which should do very well with the Fed rate hikes. Technology, healthcare stocks, which are really oversold. The broad market is actually pretty inexpensive. People are complaining about the narrowness of the market, but the other side of that is if you look at broadly at stocks, there's a lot of stocks right now that you can buy for low double-digit multiples, even single-digit multiples.
But this would be not learning from the 2007 cycle peak, where, as you know, expensive got more expensive and cheap cyclicals got cheaper because the cycle was right. The cycle was slowing, and everybody said, wow, I can keep owning expensive and I keep buying cheap. And that's actually been one of the great traps this year, is that people kept buying cheap and it kept getting cheaper, was it not?
Yeah, I'm smiling as you say that, John, because I think one of the great forces that driving this market higher is what people think they have learned from 2000 and 2008.
It's different this time.
Most of the people managing money today, they know stocks are going to go down 40% because they were there in 2000. It happened again in 2008. It is not going to happen. We're nowhere near the end of a cycle here economically like we were in 2007.
You said
yeah, I mean, I'm smiling because I think I completely disagree with that. I mean, at the beginning of the year, did you say that S&P profits would go negative and that GDP would get cut in half and that we would see a stock market? The Russell 2000, as you know, is down 5% this year. You know, was that your call at the beginning of the year? I think that people that actually made a cyclical call made a pretty good call.
Yeah, well, fair enough. We were bullish going into this year. We've been bullish since the 09 lows, to be fair, too. So, you know, I think the market took a pause this year.
Right.
But we've taken big hits from China, oil prices, strong dollar, Fed hikes, and we're sitting where we started the year.
Yep. Exactly.
That's pretty solid. That tells you there's an underlying bid. Despite all those things, we're still sitting flat year to date.
But most portfolios aren't. But I mean, if you just stare at the S&P 500, it's down at this point it's down 0.4% for the year. The Russell's down 5%. But if you look at the Russell 3000, the average loss is 23% in a stock. That's why so many money managers have terrible performance, even though the market is. It's
been a tough year for active management because the indices have done a lot better.
Yeah,
it's been a very narrow market.
A terrible year.
John,
can I jump in here on this question about whether we're at the end of this cycle is a really important and fascinating one. And, you know, my take on it is that this cycle is not like other cycles that we've seen. You know, I'll take the housing sector as one example. At this point in the 2001-2007 cycle, the housing sector was at the end of a historic boom. You know, we went through most of this cycle with the housing sector continuing to contract. It's only now starting to get back on our feet. I was actually just looking at these charts yesterday. It just doesn't look like past cycles. I'm not saying that that means it's going to keep going for another 5 to 10 years, but it's really hard to describe this thing the way other cycles have played out. Fiscal policy is another really good one. You know, fiscal policy has been contracting, and we're starting to get some tailwinds on that front. It's really hard to read this based on the way we've seen other cycles.